right, well, we have seen lithium stocks light up today after a key player in this market ultimately decided to idle production at a major lithium mine. I want to get some more perspective on what exactly is going on and how this could ultimately impact everything from prices to the companies at the center of the story. David Deckelbaum is someone who covers this area closely. He's with TD Cowen. David, thanks very much for being with us. People might have heard some of these headlines today about what exactly transpired, but you've got a Chinese battery giant that halted operations at one of the major lithium mines. What happened?
Yeah, look, I want to start by saying some of these reports are always unclear, but what we understand is that CATL, which is the largest battery manufacturer in the world, that also has vertically integrated lithium mining operations, they didn't renew their operating license, or they didn't file the paperwork in time to get their renewed operating license at their largest lepidolite mine, which is a source of hard rock lithium. It tends to be higher on the cost curve and has been a very predominant source of oversupply in the market, really coming from mainland China over the last couple of years. The company did say that they intend to resolve this issue quickly, and that they want to bring the mine online, as quickly as possible. So it doesn't appear like this is price-driven or an economic rationale. It seems like this has some regulatory overtones to it. But I think that this is still a wait and see. There's been a lot of reports recently that Chinese miners have been rationalizing supply under some regulatory pressures, just given the enormous waste that comes out of mining for lepidolite. But I think, again, it's very early to draw conclusions other than to say this major production is offline right now.
I guess when you look at the reaction in the markets to this news, what does that tell you about just the general viewpoint out there on supply and, outside of the factors that may have gone into this decision?
Sure. Look, I think one of the things that we talk about in our research is that most of the incumbent operators outside of China, roughly 35% of production that's online right now, has been operating at a loss, right? So the market needed some correction, and it wasn't coming from the source of demands, because we've seen demand growing fairly rapidly in a 20% plus range over the last year, and we've seen some positive surprises from things like energy storage applications. So I think there's there's still very much an undercurrent of strong demand growth for lithium. The challenge has been trying to account for this excess supply, namely coming out of China and some hard rock mining operations out of Africa that are then refined in China. So the sentiment in the investor community is universally bearish, and when you see this contraction in price sub $10,000 a ton for lithium, if you go back several years ago, we were north of 80. You consider the fact that most players, again, are operating at losses right now. It doesn't take much to start seeing perhaps there's some corrective actions that are going to drive a price rally, at the very least a short squeeze on names that are very heavily shorted.
And as someone who covers a fairly large universe of companies, but certainly has had some of these lithium names on your coverage list, we were showing Lithium America stock price today. What should we know about some of the stocks that are on the move? What would be some food for thought for investors who are watching the movement today?
Yeah, sure. Look, I think that many of these names that are still around today have this survivorship bias of they are either funded and they have production coming online at some point later in the decade, or they've already addressed a lot of major balance sheet concerns. If you look at bellwethers like Albemarle, you have Lithium America's up on the screen. Like, they've already received funding from the Department of Energy that's largely going to bring their production online in Nevada, beginning, towards the latter part of this decade. So, I think stories like that have certainly less risk associated. I think that the market just needs to see, is there a path back to what we think of this long-term incentive price of perhaps $16,000 a ton relative to where we've been in this $10,000 a ton range. And that's when I think it starts becoming interesting again to kind of own these names through the cycle.
I don't want to give you Too, too long an explanation opportunity here just to put it on your shoulders. But I think that China's EV ambitions do play, they play a direct role, indirect and a direct role in this story. Can you just talk to us a little bit more about what's happening in China when it comes to EV manufacturing and how this ties back to that?
Yeah, sure. Look, I think that China has certainly been the global leader in EV penetration, which we now see as new vehicle sales are over 50%. You see a lot of disincentives for internal combustion engines, gasoline engines, right? So, the country is very heavily invested in furthering the EV fleet in the country, and it plays into the strengths that they have on low cost of supply, low cost of electricity, right? So there's very much like an initiative, I think, like one, to be less reliant on global oil imports, but two, to be able to harness their own natural resources and make EVs affordable. And that plays into the fact that the country more or less dominates the entire battery market. That's a major source of exports globally that goes in conjunction with consumer electronics. And the lithium price, historically, China was always reliant on imports from other countries, particularly the lithium triangle in Chile and Argentina. Building out their own domestic supply, helps Chinese manufacturers, particularly on that downstream battery side, stay away from margin shocks and have a steady source of supply to the market. And a lot of that goes in conjunction with the ambitions to move to EV penetration well beyond 50% of new sales. So, we think that you're going to see over 1 million units a year of EVs in China being introduced every year. I don't think it's too far-fetched that a couple decades out, it's going to be very difficult to find any gasoline-powered engines in China.
All right, David, really helpful context there. Thanks very much for making time for us today. David Deckelbaum is with TD Cowen, and